Episode 3. Thinking in Probabilities. The Key to Mastering the Market. Welcome to Episode 3. Thinking in Probabilities. The Key to Mastering the Market. The Journey to the Zone. Secrets of a Successful Trader, on the V-Invest channel. I'm pumped to reconnect with you on this journey as we keep exploring the mindset and art of trading. Not just to scrape by, but to truly dominate the wild world of financial markets. If you caught Episode 2, you'll recall we dove into the zone. That mental state every trader craves, where you trade with rock-solid confidence, discipline, and calm. We also covered why technical skills alone don't cut it and how mental traps like fear, greed, or revenge trading can wreck your game plan. Today, we're stepping into Chapter 2 of Mark Douglas's Trading in the Zone. A chapter I'm convinced will flip how you see trading upside down. Our focus? Thinking in probabilities, a concept that might sound dry, but it's actually the key to owning your psychology and getting closer to the zone. I'll break down the deep lessons from this chapter, mix in my real-world experiences, and show you how to apply this stuff to your own trades. This is gonna be a long, detailed, and inspiring chat, so gear up to dig deep into the trading world with me. Imagine you're at a casino, standing by a roulette table. You bet on number 17. The ball spins, and you wait, heart racing. If it lands on 17, you cash in big. If not, you're out of luck. You can't control where that ball stops. All you know is your odds are 1 in 38. Now, think about trading. You place a buy order based on technical analysis, betting the price will climb. Just like that roulette ball. You can't be sure the market will follow your hunch. All you've got is probability. The chance your trade pans out based on the system you've built. Trading's a lot like a probabilities game. Unlike a casino, though, you don't bet once and walk away. You're in it day after day, week after week, month after month, with every trade spinning the wheel. The catch? Most of us don't see trading this way. We crave certainty, want to win every time. And when we lose, it feels like total failure. That's the big mistake Mark Douglas calls out in Chapter 2. And today, I'll show you why shifting to a probabilities mindset is a game changer for becoming a winning trader. When I first read Chapter 2 of Trading in the Zone, I was floored by how simple yet profound this idea was. Douglas says, the market is an uncertain environment, and to succeed in it, you have to accept that nothing's guaranteed. Sounds basic, but living it? Tough as nails. I used to be a trader obsessed with certainty. Every order I placed, I needed to know I'd win. I'd spend hours on charts, scour news, even pray the price would go my way. But here's the truth. The market doesn't care about my wishes. Or yours. Back in my early stock trading days, I thought if I did enough homework, read financials, analyzed charts, tracked news, I could nail price moves every time. Once, I bought a tech stock with unshakable faith it'd soar. I'd crunched the numbers. Killer earnings beat expectations. The chart showed a clear bullish pattern. Every indicator backed me up. No way this flops, I thought. Then a baseless rumor about the tech sector hit, and the stock cratered. I lost nearly 30% of that investment in hours. I was pissed. Why'd this happen? I did everything right. I rechecked my work, hunting for flaws. There weren't any. My analysis was spot on technically. But the market didn't follow my script. That's when it clicked. Trading isn't about predicting perfectly. It's about accepting I can't control it all. Douglas calls this the illusion of control. We think if we're good enough, smart enough, patient enough, we can tame the market. Wrong. It's a living beast, driven by millions of people making millions of calls. You can't know who's buying, who's selling, or when a random news bomb will drop. The only thing you control is how you respond. And that's where thinking in probabilities comes in. So, what's a probabilities mindset? Simple. It's seeing trading as a game of odds. Every trade you take has a chance to win and a chance to lose. Based on your system, you can't know if the next one's a winner. But you can bet that if you stick to your system over enough trades, you'll come out ahead, as long as it's got a statistical edge. When I started rolling with this, everything shifted. Before, every loss felt like a gut punch. I'd beat myself up, think I wasn't good enough, and tweak strategies to fix it. Post Chapter 2, I saw losses aren't failures. They're part of the game. I started treating each trade like a dice roll. Sometimes I win. Sometimes I lose. But the key is rolling the right way long enough for the odds to tilt my way. To paint the picture, here's a story from my journey. I was trading Forex, GBP, USD, and built a system with technicals, moving averages, support, resistance levels. Nothing fancy. I'd buy when price hit support with an RSI confirmation signal. I backtested it, about a 60% win rate. So, 10 trades. I'd win 6, lose 4, right? I started trading it, but week 1 was a train wreck. 3 straight losses, down nearly 10%. Panic set in. Is this system junk? I considered ditching it, upping sizes to recover, or quitting. Then I remembered Douglas's words from Chapter 2. A few losing trades don't mean your system's busted. It's just probabilities playing out. I stuck it out, kept trading, no tweaks. The next 10 trades? 7 wins, 3 losses, close to that 60% I'd calculated. By month's end, I was in the green. Not because I nailed every call, but because I trusted my system and let probabilities do their thing. The takeaway? Trading isn't about winning every hand. It's impossible. It's a long game where you accept losing streaks. Knowing a solid system and discipline will carry you through over time. Douglas calls this thinking in probabilities, a giant leap toward the zone. But here's the hurdle: unrealistic expectations. I tripped over this tons. After a few wins in a row, I'd expect to keep winning forever. Felt invincible. Started risking more, ignoring rules. Then a loss would hit, and I'd spiral, thinking I'd screwed up big time. Take this S&P 500 futures trade. I had a 5-win streak. Profits stacking up nice. I've cracked it. Easy money from here, I thought. I doubled my size, skipped my stop loss, jumped into a trade half-baked. Market flipped, and I wiped out all 5 wins in one shot. I was gutted, kicking myself, ready to throw in the towel. Chapter 2 showed me those wild expectations were the root. I'd assumed I could win every time, that each trade had to pay off. Trading doesn't work like that. It's a dice game. You can't know the next roll, but roll enough with an edge, and you'll win out. To ditch those expectations, I rewired my head. No more treating trades like do-or-die battles. I zoomed out. 10 trades, 20, 50. Stick to the system, and I'll be fine long-term. I'd tell myself. Pressure melted away. I stopped freaking out over losses or getting too hyped on wins. I just did my job and let probabilities handle the rest. Another tale. Trading gold with a Fibonacci and candle pattern system. Win rate was 55%. Not sky high, but solid with good risk management. First month? Rough. 6 of my first 10 trades flopped. Doubt hit. This system's trash. But Douglas's probabilities mindset kicked in. I stuck with it. No changes. Month 2. I won 7 of 10. Ending with steady profit. Looking back, those early losses weren't failure. Just probabilities doing their dance. If I'd bailed after month 1, I'd have missed the payoff. Thinking in probabilities gave me patience. And patience paid off. Douglas stresses that this mindset needs a reliable system. One you trust and have tested. More crucial? Discipline to stick with it. Even through losing streaks. Building that took me forever. Early on, I'd break rules. Up sizes to get back losses. Trade without signals because I felt the market. Every slip cost me big. And I learned discipline's what keeps you in the game. Here's how I built my system post Chapter 2. I simplified. A price action strategy. Trade key support or resistance with a candle pattern confirmation. Rules were tight. Max 1% risk per trade. Always set stops. Only enter when all boxes checked. Backtesting showed a 60% win rate. 1 to 2 risk, reward. $1 risked for $2 won on average. I took it live. First 20 trades, 12 wins, 8 losses, close to my 60% target. I didn't budge on rules. Win or lose. Some days, 3 losses stung, and I wanted to quit. It's just probabilities. Keep going, I'd say. By month's end, I was up, not from genius calls, but from letting my system and odds work. This probabilities mindset didn't just boost my trading. It reshaped how I see life. I started applying it to daily choices. Time management, stress handling, realizing not everything's in my grip. Instead of controlling it all, I focus on what I can nail. To bring this home for your trading, here are steps I leaned on. 1. Build a simple system. Pick a strategy you get and can test. Doesn't need to be fancy. Simple often wins. 2. Test it. Use historical data or a demo to check your win rate and confirm a statistical edge. 3. Accept losing streaks. Brace for multiple losses in a row. Don't let it shake your system. 4. Stay disciplined. Follow your rules, no matter how you feel. Break them? Log it. Fix it. One more story to show this in action. I traded crude oil futures with a system tied to key levels and economic news. Week 1? Brutal. Lost 4 of 5 trades. I was bummed, thinking I'd wasted time, but my backtest showed a 55% win rate. Those streaks were normal. I stuck it out. Next 10 trades. I won 6, clawing back losses with profit to spare. That's when I knew quitting after week 1 would have killed my shot at the upside. Thinking in probabilities pulled me through doubt. And it can for you too. We've covered a ton in episode 3. Probabilities mindset. Why unrealistic expectations tank traders. And building discipline to ride the odds. I hope you see how Douglas views trading and how you can use this to inch toward the zone. Next up, episode 4 dives into chapter 3 of Trading in the Zone. Objective thinking. How do you trade without personal emotions screwing you up? I'll share specific tricks to keep a cool head. Plus real stories to back it up. Thanks for hanging out for episode 3. If this clicked, subscribe to V Invest and hit the bell for more. I'd love your take. Ever tried thinking in probabilities? How'd it shift things? Email me or comment below. Wishing you continued success in your trading career. And see you again in episode 4 of this podcast.